Hi everybody, Alex Employee here from Expert Forex, and in today's video I'm going to give you a couple of ideas of how I approach using the strategy tester to find suitable settings for my EAs. Now if you don't know already, to find the strategy tester you just click on View in the MetaTrader platform and then select Strategy Tester. We are in the process of launching a brand new EA. It's called the Lucky Trader, and it is quite an unusual EA in that it does not use any fundamental or technical analysis to make trading decisions. Whenever it reaches a decision point that it needs to say buy or sell or something like that, it flips a coin. So it flips a coin. If it's a heads, it buys. If it's a tails, it sells. So why would you create a robot like this? It's to get rid of the baggage. And here we see a trader with lots and lots of baggage. And the baggage says you have to be an expert at technical analysis and fundamental analysis to make money in this market. And here we have an EA that, as you will see, is highly profitable, low drawdowns, and relies totally on luck to produce its results. In other words, it flips a coin when it needs to make a decision. Now here's the methodology that we use to create settings. Firstly, this is a brand new EA, so the type of thing that I would do is I would do a very broad and wide backtesting activity. So I'd look at many time frames, many currencies, lots of strategies, different setting ranges and things like that. So and that's why this funnel is very wide in the beginning. And then I would do more targeted backtesting based on the results of the broad testing. So the broad testing will tell me it's no good for this currency, it's no good for that time frame, and so on and so on. And then I'll narrow down and do more detailed testing on the ones that are more advantageous. Then right at the end, I'll do a robustness test. Now, the robustness test is basically then applying more stringent testing conditions, for instance using tick data and not the more loose forms of data that are available. Only then will I have a couple of settings that I want to test, and I will then go into demo forward testing. So I must probably create 20 platforms, load those various currencies in the platforms, and then trade them for a month or so to see how they perform in the real marketing conditions. So that is our methodology of finding testings. And what I'm going to show you today is an aspect of number one here, the broad and wide back testing. So here we are on the strategy tester. We are testing the Lucky Trader. I'm going to be using the pound USD, and I'm going to use open prices because remember I said at the moment it's broad and wide. I want to get a feel of what this EA does. I don't want to get to the settings straight away. That only happens in a week or two's time, and then it has to be tested for another month. So I'm in no hurry whatsoever. I just want to get a feel of what the EA does, what it accomplishes, and so on. Then I'm testing a short period, which is only the 2024 trading year. So it's from the 1st of January up until the end of May. And again, the reason why I'm using a short period is I want to get a feel. I just want to get a feel of what goes on with this EA. I'm using a 15-minute time frame, and I'm using a spread which is more or less in line with the pound currency. I'm using special tick data, and when you load the strategy, you will most probably not see this. I'm using very special tick data. That is in fact tick data. The tick data that is shown on the tester using the broker's data is not tick data at all. There is no tick data that comes from the broker. Now, this might differ on MT5. I use MT4 because I can manage MT4 a lot better. Okay, so that's the setup that I'm using. You can see I then clicked on optimization. I created ranges for all the settings that we want to test. There are only 6 settings to this EA that I am testing, and the idea is to get a feel of what kind of things where are the delicate settings, where are the important ones, which ones are the most sensitive settings, that kind of thing, and which ones produce the best results, obviously. But again, I'm not getting specific into actual settings, I'm just getting a feel of how the dynamics within the EA work. So I ran an optimization based on those particular inputs. Here are the results of the first run that I did, and what was tested here was over 500,000 combinations, and here are the best ones, and you'll see later on I don't only look at the best ones, I also look at the worst ones. So let's have a look at what the best results tell me. So firstly, here are the profit figures. Now those are quite high. If you think we're starting with $10,000 and we have almost done a 400% return on our 10,000 in 5 months, so these returns are quite good, and they're quite robust because they don't go down dramatically, they just filter down quite nicely. So the returns on this EA are pretty good. Then my next area that I flip to are the drawdowns, and I say, look, it's good to have those kind of returns, but your drawdowns play a role. And here you can see that the drawdowns are a small percentage of the actual profit created. So very small drawdowns. There's one, 33%, 33,000 profit, 5,000 drawdowns. Now again, these drawdowns are manageable, because what you can do is you can reduce the lot sizing. And you, for instance, let's take that third one. Let's say you halve the lot sizing. Then that will go to, let's say, $16,000. But that will drop down to, let's say, $2,800 or $900. Now, that's a more manageable amount if you're trading a $10,000 account. So I'm not too worried if the drawdowns do look high, because I can manage them down. I can reduce the lot sizing to where I want it to be. So I'm looking at the ratio. The ratio is the most important thing that I look at. If the ratio is very good, if it's a big profitability, small drawdown, that's the kind of ratio that I'm looking for. And this one certainly, this was the first run that I did, and that's why I thought I'd make the video. This one's giving nice income with low drawdowns. Then we look at the actual settings that I've tested. I've tested the gap size. I've tested the rate of increase or decrease of the gap size. I've tested the lot size multiplier. I've tested the take profit pips. And I've also tested the closure amount in dollars, and the pruning approach, which is very important. When must pruning kick in, and what kind of approach must the pruning take? So those are the variables that I've tested in this particular test. That's all that you really need to test for this particular EA. Again, as you can see, there are no indicators or anything like that. The trading happens on a flip the coin basis. So there are the results that I've got, and in general you can immediately see this EA likes low gap sizing, very low gap sizing. It also, strangely enough, likes decreasing gap sizing. So there are a lot of 90s there, which means that the gap sizes actually decrease by 90% as they get opened. Very kind of surprising. Sometimes these tests on optimization give you quite surprising views on what is profitable. Then you have a look at the multiplier, and the multiplier is through the roof. It is such a high number, 1.9, really big numbers coming out here. So again, I'm getting a feel, small gap sizing, reducing gap sizing, and a multiplier that increases the lot sizing dramatically from grid to grid. By the way, this operates on a grid system. And then the take profit kicks in, and again this take profit is in pips. So we're trading a 10 pip gap, but we're taking profit at 30 pips. So interesting that has come out, and you can have a look here. There are some very low numbers coming out here. 10, 30 is about the biggest. So I'm starting to get a feel of what kind of take profit we need. And then the closure amount. The closure amount is when you've got a basket of open trades. When do you want to close? What kind of profitability do you want to get out of this? And this is in dollars, and it says, okay, closure amounts is quite high. It's almost an average of $100 a shot. Again, I'm building a concept of how this EA works. It wants big closure amounts, small targets, and so on. And then the pruning, when should pruning start? This one says mainly between the levels of 5 and 4, it looks like, if you just go down there. And then which pruning approach it likes, and 1 is the last and first, and 0 is the balanced approach. So it seems to like first and last approach quite a lot. So immediately I've got a good feel of what kind of things does this EA like. What size gaps, what type of multipliers, all that type of thing. So this has been quite informative. I can't stop here. I have to test 4 time frames: 4 hour, 1 hour, 15 minutes, and 5 minutes. I've got to test at least 10 currencies. So I want to see with those other tests that I do if I get the same message over and over again. Small gap sizing, large scalings, then I know that is what this EA likes. It likes that kind of trends. I don't go into the specific settings, but I start building up a good picture of what the EA does. Now that was looking at the good results. Then I also look at the worst result, absolutely the worst. There you can see it blows the account in certain cases, and then you look at the actual results causing the blown accounts. Now sometimes there is not a big difference between the good and the bad settings. So this is the trick, is to find the setting that actually turns these settings into profitable settings or losing settings. That's a very important activity. And again, this one shows you why these are failing. The gap scaling rate is very low compared to the winning one. The multiplier seems to be high. The take profit is higher than the other one that we looked at. So there's one, and those are the most different ones. Closure amounts maybe a bit lower than the other one, so that plays a role, and the pruning doesn't seem to. So we're starting to get an idea of which settings are the ones to focus on. Most probably the take profit one and the multiplier ones are the ones that are most sensitive. But you can't really tell from this exercise that I've done. It's a good starting point, gives you a feel of what's going on, why certain are failing, why certain are succeeding. But I'm going to show you the other way that I use. The other thing that I do is, let's say I have done let's say 3,000 tests or 4,000 tests, and I then say, all right, let's have a look at what point do the tests go from positive to negative. So there you can see it's positive, and then it goes into negative. So I sort on profit, and I find the point where they turn over, and then I move my cursor down to that point. There the cursor is at the point where it turns over, and then just out of interest I say, okay, or maybe 3/4 of the settings are positive and only 1/4 is negative. So that is gives me a feeling of how robust the EA is. It's actually, what it's saying is that the majority of settings are quite robust and give you profitability, whereas only if we can eliminate that leg, that would be great. Okay, so now let's have a look at how I also get another view on what the settings should be. So when you do your optimization, there are the optimization results that I've just shown you, but there's also optimization graphs. So I click on the optimization, and that's what it looks like. But I'm not interested in the graph itself. I'm interested in the 2D surface, and that's what you need to click on. You click on the 2D surface. Let's go have a look at what happens when you do that. So what you then see is a two-dimensional view of two of the settings. So, and I call this a heat map. So it shows you which results are bad, which are the light ones, and which ones are the best results, which are the green ones. And there's an x-axis and a y-axis. So what I do here in this particular case, for the x-axis I use the gap. So that's the gap size at the bottom. And for the y-axis in this particular case, I use the take profit. And the trick then is to keep the gap size the same and just to vary the y-axis, so you can see different views of what there is. So, but let's have a look at the story that this one tells. So the dark green ones are the successful ones. So just in general, again, just in general, this EA likes small gaps. It doesn't like gaps of 40 and 50 and 60. It likes 10 to 20. That's the, in general, the picture. I need to do, as I say, another 10 currencies, another 3 time frames to conclude this, but in general, that is what you see first. Then in general, the take profit must be small, because these are the smaller take profits. That's from 10 to 20, and to 20 to 30, and from 30 to 40. So that is the area that the take profit. So it also likes, let's say, a smallish take profit in terms of pips. Now the take profit is in terms of pips, so that's what it likes. Maybe a little bit more refinement that is needed. The other tip is that when the good blocks are on the edges of this heat map, it means that you haven't tested widely enough. So I should actually go and test for 5 this way, and maybe lower, and also for 5 that way, because I haven't, it's squeezing itself into an area here. But again, I don't want to really have gaps smaller than 10, and also I don't want targets less than 10. So that's most probably why. But in some cases, when it's squeezing against the sides, then it means your testing hasn't been wide enough. Anyway, I think you're getting an idea of the story that I get from the EA. I'm not looking for specific settings. I'm just getting, just trying to get the story which says, oh, this one likes small gaps, this one likes smaller targets. So let's go on to the next one. So now we're looking at the gap scaling rate. So in other words, should we increase the gap, and by how much? That's basically what the scaling rate says. And again, we've got our gap sizing here, so we've still got that there, but it is saying that it is better to decrease your gap sizing than to increase it. That's the story that is being told, and the more you increase it, the worse the profitability. So that block again, 90 to 95, 95 to 100, maybe 100 to 105. That is the sweet spot. So if you're thinking of increasing your gap size by 50%, not a good idea, because it's saying no, you could do better if you decrease your back size. So can you see how I'm building up a story behind the key settings that is going on? So let's move on to the next one. So the next one is the closure amount. That's where your basket of trades, what is the best setting for your closure amount? And now again, we've got the gap size here, but now we see that the higher you make the closure amount, the better. And you can see, and the reason for that is you can see the dark greens up there, the lights down here. So, and here is the amount. So it's actually saying, all right, so $110 is the best closure amount. That's what it's saying. And in general, the higher the closure amount, the better. Again, a story that I've found. Then we move on to the multiplier. So the multiplier is the lot multiplier. So if you start with, let's say, 0.1 lots, how much are you going to increase that point lot as the grid moves up or down? So here again, the same story. Here it's saying the bigger the amount that you increase your lot size by, the better your results. And this is an example of where I should have increased the testing range a little bit more, maybe another 2 or 3 blocks up, to make sure that I'm getting the best setting. But at this stage, it looks like 0.19 is a good setting. It's the most profitable setting for here. But again, the story that I'm getting is that the bigger the multiplier, the better. The smaller the multiplier, the worse. That's basically the story that this graph is telling me. Now, that's a very high multiplier, but it is because we've introduced pruning. Now, pruning saves a lot of these strategies because it makes sure that there are not many open trades that happen. So we might see this next. Okay, so here we are. So when to start pruning. And again, you've got 2, 3, 4, 5 here. 5 is clearly the favorite, but it is also in the top. So I need to, and in my next test, I need to increase this by 2 or 3 to make sure that that is the optimal level. But the story again here is that 5 is most probably the right setting to start pruning. So just let the EA trade normally up to until it's got 5 open trades, and then start pruning after that. And then the next one is which, all right, no problem. And then the next heat map is which pruning approach is the best. This is the balanced approach. This is the first and last approach. They're both pretty good, but the first and last has its nose in front. So again, I get the feeling that the first and last will give you better results. Okay, so I hope you've enjoyed this video, and I've given you some ideas of how to better find settings that work for your particular EAs. This is a brand new EA. That is why I'm going through this process. This is what you should do when you purchase an EA. You should be doing these kind of exercises, and you should start broad and wide and not look for the perfect setting at that point. You only do that after you've demo traded potential settings for 3 or 4 weeks. That is the big message here. And the other message is Forex trading is exciting. Can you see how if you really apply yourself, you can reduce your exposure to bad settings dramatically by using those heat maps and by doing these kind of exercises. And you might get different heat maps for different currencies, different time frames, and so on. But you need to do this. The more you do this, the more your feel for what you can possibly succeed will increase. The other reason for this video was to do a brief introduction of the Lucky Trader. You can see that EA is an exciting one. It has high income, it has low drawdowns, really exciting EA, and I'm in the process of testing this in a lot of detail. And then the third thing I wanted to do is basically expose you to our testing methodology, which is this one that we follow. It is one that has proven to provide the most stable settings. So from me, Alex Employee, cheerio.